The FOMC decision is the most influential event for global currencies. As the world's reserve currency, any shift in Fed policy directly impacts major Forex pairs like EUR, USD, and USD JPY. When the Fed is hawkish, signaling higher rates, the dollar strengthens as capital flows into U.S. assets, pushing pairs like EUR, USD lower. Conversely, a dovish stance, hinting at rate cuts, weakens the dollar, often leading to rallies in riskier or higher-yielding currencies. Real volatility comes from surprises. If the Fed's tone shifts unexpectedly, Forex pairs can explode in seconds with sudden spikes and false breakouts. Traders scrutinize every word in the statement. Subtle changes in inflation or growth wording can completely shift global market sentiment. Finally, the Fed chair's press conference adds complexity. A single comment on risks or employment can reverse market moves instantly. The Federal Open Market Committee's decisions influence global currencies more than any other central bank. The FOMC drives capital flows worldwide. At the center is the US dollar, the world's reserve currency. Fed policy shifts impact major pairs immediately. Traders react not just to rates, but to expectations and tone. When the FOMC signals higher rates, the dollar strengthens. Higher rates attract global capital. This demand for the dollar often pushes pairs like euro to US dollar lower within minutes of the announcement. Conversely, when the Fed turns dovish, the dollar weakens as lower rates reduce the yield advantage. Investors move to riskier currencies, causing rallies in pairs like Australian dollar to US dollar and emerging markets.
What if trading didn't mean risking your own savings? At Funded Folk, your skill and discipline unlock real capital. We bridge the gap for talented traders tired of capital limits. Choose an account, pass the evaluation, and start trading firm capital. Focus on strategy without the emotional burden of personal loss. We offer clear drawdown rules and flexible conditions for all styles. Enjoy high profit splits with fast, reliable payouts. We reward long-term discipline and consistency over reckless gambling. Join Funded Folk today and trade with confidence. Funded Folk. Real traders, real opportunity, real fun.
FOMC decisions heavily impact risk sentiment. A hawkish Fed often pressures stocks and strengthens safe haven currencies like the US dollar and Japanese yen. Policy divergence is another major driver. When the Fed tightens while other central banks remain dovish, it creates sustained, long-term trends in the Forex market. Timing is critical. Initial moves can be misleading as markets digest news, often leading to sharp price reversals. This is why patience is vital for traders. Beyond the initial spike, shifts in Fed policy shape trends that can influence currency markets for weeks or even months at a time. Ultimately, the Fed drives expectations. Understanding how they influence capital flows and interest rate differentials is essential for any serious Forex trader. Stay disciplined when emotions run high. For more Forex education, make sure to subscribe and like the video. The market never sleeps.